Investing in residential properties can supply investors with steady revenue streams that cover the mortgage while supplying some extra profits each month. When such properties are ultimately sold, investors stand to enjoy substantial windfalls. But these selling events can trigger significant long-term capital gains tax liabilities. I'm Ken Crotts, a managing broker at eXp Realty and a 35-year veteran in the real estate brokerage and investing business, and I have a passion for investing in real estate. All my life I've loved it. Key takeaways here are, number one, the capital gains tax rate is 15% if you're married filing jointly with a taxable income between $78,750 and $488,850. There are various methods of reducing capital gains tax, including tax loss harvesting, using Section 1031 of the tax code, and converting your rental property into your primary residence. For a married couple filing jointly, a taxable income of $280,000 and a capital gains of $100,000, the taxes on the profits from the sale of a rental property would amount to $15,000. Fortunately, there are ways of minimizing this capital gains tax bite. This video and the blog describe three of the most effective methods. First is to offset gains with losses. What is it? It's a tax loss harvesting. Who is it for? Anyone with capital losses in a given tax year. What do you get? The ability to subtract those losses from the capital gains realized from the rental property sale. Tax loss harvesting describes the process of reducing tax exposure when selling a rental property by pairing the gains from the sale with the loss of another investment. This can be a tax planning strategy if an investor is holding an investment that has lost value, an unrealized loss, and decides to sell the asset at a loss in the same year as a gain on a rental property sale, a realized loss. Although this tax minimizing tactic is primarily used to offset gains from stock investments, more and more folks are applying it to rental real estate property sales. For example, assume an investor made $50,000 from the sale of a rental apartment in the current year. She also has an unrealized loss of $75,000 in the stock market. She can choose to sell off the portion of her stocks to realize the $50,000 loss in order to fully offset the $50,000 in capital gains. For a complete list of the ways you could reduce your capital gains on the rental sales, click below and get to the full article. If you'd like to talk about a property you own or just have a question in general, just click the link below and pick a time on my calendar to chat. We respond quickly to calls and text messages as well. I hope you found this information helpful and look forward to hearing from you soon.